All right. Welcome, everyone. My name is Antoni. I am one of the co-founders and a managing partner at Nexo. And welcome to this latest edition of the AAA, which stands for Ask-Armanino-Anything. Now, as you can perhaps see, this format today is slightly different. We are keeping the AAA, however, because this is going to be the Ask-Armanino-Anything session. So yet another AAA. And I am joined by two amazing hosts. Guests, I'm the host. Guests today, these are Noah Buxton and Clayton Lowery. Both of them are working with and at Armanino. Just as means of a very brief introduction, and I'll let them, intro themselves a little bit as well. But Noah, he has more than 10 years of experience in auditing, legal, IT, and regulatory compliance. He leads Armanino's blockchain and digital assets practice. He also advises blockchain and virtual currency clients on a myriad of industry-specific issues. And he's just a terrific guy to work with, as I am told by the entire Nexo team, who has been dealing with him almost on a daily basis this past few months to, complete the real-time audit that we have so proudly presented to the community. And his colleague, Clayton Lowery, he is a digital assets practice manager. He is essentially the one who provides subject matter expertise on blockchain and digital assets to other service lines within the firm, and acts as the lead product manager on Nexus integration on Trust Explorer, Armanino's real-time attest software. And welcome, guys. So much for the intros. Happy to have you on. And before we dive into the questions, you want to add something to the intros? Did I miss anything terribly important?
No, it was a warm welcome and a good intro. So thanks for that, Antoni. Good to be with you.
Thanks for having us.
Absolutely, anytime. So we are moving into the questions, and how conveniently the first one is addressed to me. And the question is by an anonymous person who asks us, what does the audit give us? What opportunities does it open up? And what is the next step? Well, there are many steps ahead of us. You know that Nexo, we like to do things with compliance in mind. We are one of the very few companies back in 2018 that started to build up this as a serious financial institutional company rather than some startup built by a couple of enthusiasts who maybe want to cash in on the ICO craze. So we always have been very mindful of regulation, and we have been on this crusade to acquire licenses throughout the world and all the jurisdictions that we are operating, and also to increase the level of transparency for the entity itself, and also set the bar high or higher for other companies out there and challenging them to essentially do the same to the benefit of the overall community, to induce more institutional adoption, because this is terribly important to the serious players. So this is, the real-time audit is one of the first, well, not the first, but I think step number 3 or 4 on the Nexo transparency road. And we are very excited about this. There's this competition about whether us or another company was first to get there, but these are minor things to worry about. The important things that it is there, and it is part of an overall plan to have even more transparency, to have fully audited financials. I know I get this ask anytime I'm doing a Ask Me Anything session, because this is something that has been a challenge for the whole industry. Just millions and almost billions of transactions, scattered across different exchanges, wallets, custodians. It is a Herculean task to to fulfill. This what we have already, this real-time attestation as to assets and liabilities, and that the assets surpass liabilities at all times, was a very first important interim step on the road to fuller audits. And this is what it gives us. It gives us this overview that we can present in front of the community, presented by a third-party company, and it's such a reputable one, top 25 companies, accounting independent public companies in the United States, speaks volumes to itself. And I will really be interested in, another one apart from me later on in the questions, actually walking a little bit the audience through the process and what it actually took to fulfill this, because it truly was a very difficult task to tackle. So perhaps we can dig into the other questions and we can tie it into this sort of intro type of answer that I just gave. And the next question is to Noah. I'm just going to read it out loud and hand it over to him. About Nexo and Lend.io, both crypto lenders claim that they were the first one to be real-time audited by Armanino. One of them must be wrong. Who is it? Comes from Thomas. So Noah, over to you.
Oh, a juicy question. All right, thanks for sticking me right in the middle of it, guys. No, it's a good question. So I actually think that both claims are actually true and can be consistent, but it requires a little bit of explanation. So bear with me, right? Because I think this is, think of how you explained crypto to your family or to your friends that didn't know about it to begin with. It's going to take a little bit of time, and it has, you have to have a willingness to understand some of the complexities here. So again, I think that both of these can be true. It's just there's some complexities. So Ledden performed what we call the proof of reserves, or what the industry is starting to call proof of reserves, in a point-in-time way, and they've done that for 2 cycles. Now, Nexo has also proved reserves and offered transparency to clients through a real-time process. So I think that's the main differentiator here, is that this is really the first time that a lending platform has gone real-time in providing this level of transparency. And this is, we'll get into the details here, but it's significant, right? When you think about a point-in-time audit or assurance process where a team comes and does some procedures at the client, and they do it in a point-in-time way, that, as Antoni said, that can be a Herculean lift for a crypto company when there's high volume transactions and lots of complexity. But to do that in a real-time way requires a deep integration with the client, and it requires 100% asset coverage and basically 100% liability coverage too, right? So we have to have both sides of the equation in real time. So yeah, I think, actually both, again, just to sum it up, really both of the claims can be true, and they're both really nice milestones for the industry. So.
All right, let's move on to the next question then. That's for Mr. Lowery. Can you explain in layman terms what the assets and liabilities for Nexo are? I read the report, but my financial terminology was not sufficient. Asked San. Over to you, Clayton.
Yeah, thanks for the question, San. So yeah, the assets and liabilities are the 2 main components that make up this RTA product for us, depending on if it's a lender, an asset-backed token, or a financial product. And on the asset side, it's primarily 3 things. It's digital assets, crypto, fiat currency, and Nexo's loan book. The crypto makes up, when you deposit an asset into Nexo's platform as a new customer or existing customer, on their side, they create a liability that they owe back to you, and then they have control and custody of those assets. And so we went into on the blockchain in their various exchange accounts and queried our nodes that we host and those exchange APIs. And that's how we accumulated all of the digital assets and the cryptocurrency that are on their platform. Similar process on the fiat side, just to banks in the traditional finance world, which can be a little more painful. It's a lot easier for Trust Explorer to interact in the crypto world. We have to do some little workarounds sometimes on the fiat side with the old school banking data that they provide. And then the loan book is obviously a big piece of that as well. And that are the loans that Nexo has provided to their customers, and those sit as assets on a lending company's balance sheet. It does not include things like fixed assets, and it's specifically assets that Nexo holds that reserve those liabilities. And on the liabilities, essentially, in a layman's terms, that's what Nexo owes back to you. So that is your account balance when you log into your account and you see what, with the interest that Nexo is providing every day, you see you have X amount of Ethereum, X amount of Bitcoin. Those are Nexo's liabilities to you. And so we take every user's account, we sum each of their balances of all of those nominal digital assets, and get the total amount of customer liabilities that we call them. And that's what they owe back to their whole set of customers. And then we do a few tests on our end, so some manual things we do periodically to ensure that all that data is complete and accurate, and Nexo provides that data updated to us daily.
One thing to add, just for the big picture, that was all the sort of the detail. I think this is probably clear to most people that, you know, engage with a crypto platform, whether it's an exchange or a lending platform. But, you know, think about the traditional analogy here to, you know, traditional finance or traditional banking, right? Where you deposit $1 at the bank, and that dollar is really not 100% reserved, right? There's some fractional reserve banking that happens in our traditional financial system. In crypto, the big picture here is that has really been, from an ethos perspective, you know, the community has not really accepted that to begin with. And that's because of the nature of crypto, the nature of digital assets. They're much more like bearer instruments, right? They're much more, you know, like a gold bar than they are, for instance, a fiat currency that can be reprinted. And so that has led to this spirit or this ethos in the industry, right? That the players that we trust with our keys should be adequately reserving assets. And so what this asset liabilities equation that Clayton just talked about is, you know, at the big picture, it's the run on the bank, right? Like, I don't think this would happen, but if every Nexo customer decided, hey, you know what, I'll take my crypto and put it in cold storage on my own today, then Nexo could do that, and they could do that for every single customer. So that's kind of the importance of the picture that we're providing.
And that is terribly important because, you know, just like a little over a decade ago, you had banks, you know, in Switzerland and, you know, in Liechtenstein, you know, some of the really traditional players where they had, you know, banks that had liquidity in excess of 100%, but that is far from the norm today. So, you know, I think the whole ethos, just to build upon what Noah just said, you know, is taking some of that and, you know, bringing it back to what should be normal. You know, it should be normal that a bank can serve all of its customers and not just the first one that rushed through the door, if God forbid a bank run happens. So this, I think this, the importance here cannot be overstated. You know, this is so much fun doing it, the three of us. This is the first time that this is not an Antoni stand-up kind of format, and I really am enjoying being supported by bright minds. So we're never going back to the format where it's going to be just me. You know, you bring up such important and good points, and I can't do that on my own. Right, let's move on to the next question, which is for me. Will the real-time audit speed up things with acquiring a banking license? Asks Chris. That's a very, very good question, Chris. Now, as you know, we have engaged in a couple of due diligence processes in Europe and in the United States and elsewhere for the acquisition of a bank license, which goes in two directions. First, you know, applying for a banking license from scratch, which is, you know, you apply for a new banking license, right? So this is one of the ways to do it. It is not welcomed everywhere. You know, a lot of jurisdictions feel like they have enough banking licenses issued, and are super happy to do that. So, you know, the burden of proof that you're going to do a good job is onto you. Obviously, this varies from jurisdiction to jurisdiction. And there are some where you can, I don't want to say get away with it, but you can make it through the door, even without audited financials. Now, they have to see very clear source of funding, which we never had a problem of doing as early as 2018. We did the Reg D with the SEC, which provides us with initial funding. It was 52.5 million at the time, a crazy amount, not so much in today's crypto world where the total market cap has surpassed 2 trillion, but still, substantial proof of funds. So obviously it's going to help. It makes the job easier. It's not a prerequisite in itself, but it certainly makes things easier. More so for a process where you would acquire a stake, whether it's a majority or minority holding stake in an existing bank which has some operations, then the regulator wants and needs to see better applicants in the due diligence process, and just audited financials go a long way to prove that you are one of them. Not that a audited company has never failed in the history of corporations. We all remember Enron was audited, and Wirecard was audited, so it's not a panacea in and on itself, but it is a very good attestation as to the credibility and financial soundness. So my presumption is that we will be getting banking licenses in certain jurisdictions, even with what we have today. But then as we improve the quality of jurisdictions where we apply for or acquire larger stakes, audited financials will play an increasingly important role. And we're moving on to the next question. And it is for Noah. Since Nexo is the first ever crypto lender to be audited. Now, okay, I gotta be careful with the language here. Noah, you clarify. Would you please share more about the differences and challenges you're facing while auditing them? Asks Rick. This is one of the very important topics I wanted to touch upon. And if Noah is going to be overly modest, I'm gonna toot their horn for them. So let's hear his answer.
Awesome, appreciate the question. Yeah, and what, real first on quickly first about terminology. I think we got to be realistic about the fact that people in the community, people in crypto who don't spend their whole day auditing companies, they use this term audit, right? Because what does it mean to the general public? It means that an independent third party generally went in and checked something, right? And you can rely on that because they're independent and they performed some sort of a check under a recognized standard. And so, I think that it's generally okay. Like, we get sensitive about that as a firm using that term audit, but there's two tracks with Nexo, right? There's a true financial statement audit track. And that's what Antoni was just referencing, right? That sort of traditional yearly process that supports regulatory filings and investor due diligence and all those sort of things. And then there's this track of real-time audit and proving the company's reserves in a real-time way. And that, technically under the standards is an attest report that's issued. People will refer to it as an audit because, again, we're an independent third party that came in and did a set of procedures and produced a report, right? So to most people, it feels like an audit. So let's be realistic about that. And then let's talk about the complexities. I would say, first off, any company that is trying to do the right thing still has to prepare for an audit, because doing the right thing and having good processes and having processes that can be audited are actually two different things, right? So there's a level of dedication that's required at the company level. They have to put people and time and resources into producing auditable information. And you can run a business for a long time without doing that, but when it comes time for audit, it's a different level. So, there's kind of two big buckets of challenges, and Clayton referenced them. It's the liability side. And the challenge there is, generally speaking, how do we get a complete and accurate snapshot of customer liabilities at a point in time? So I would say that Nexo has great systems, but it's probably not as simple as most people imagine, right? You have this very nice web portal that you use, and you see a liability, you see an account balance number, and you see it broken out by asset and things like that. On the back end, that's a much more complex process, right? And it's a number of different tables that support that data. And so just getting our arms around that is sort of a technical challenge to begin with. It's not something that's particularly unique to Nexo, frankly. It's just one of the things that auditors do even in other industries, frankly. So on the asset side, there's unique challenges there. Clayton sort of referenced some of them, but one big thing, if you think about this, most companies that go through a financial statement audit, the auditor uses a sampling methodology. So they'll go in and use basically a risk assessment procedure, a materiality, as we call it, process to determine, hey, which assets do I need to test? Because by the way, a financial statement audit doesn't test everything on the balance sheet necessarily, or every transaction the company does. It only tests those that are material. And so this is, what's different in real-time land is that it's 100%. We don't have the luxury of sampling. We integrate with every single cold storage wallet, every counterparty, every exchange account, et cetera, and pull information in real time. So that is, a challenge as well. So it's much, much more work, frankly, to integrate all of these sources than it is to just test them in a point in time. I would say those are the challenges. I think, the Nexo team was great and put a lot of effort into it. So ultimately it was a smooth process, but it's not an easy process.
Yeah, and kudos to you as well, because we have, prior to deciding to work with you guys, we were in discussion with a number of different auditors, even the big four, and you all guys, Armanino, are ahead of the curve in having built out the tools to actually be in a position to perform it. Everybody wants to be in the PR section of the media where they say, we are doing blockchain audits and, we can audit this and that. But the truth to the matter is that very few companies have the actual tools to go through with this, with the different asset classes and the different chains and the way that, change reserves, change addresses, and, the whole 9 yards of the intricacy of how the transactions are settled, between wallets, between platforms, between exchanges. So it truly is much more complicated than it appears on the onset, and only the people who are in on it and inside the industry can have this true appreciation of what it actually means to pull this off. So I do want us to, if nothing else from this conversation today, to come out then to be precisely this, what a complicated task it is, and why it took so long, and why, because everything, we are the millennials, Gen Z, X, I don't know what, but we want instant gratification at every turn. And it's just that the reality of this particular endeavor is that it is quite a tough one.
Can I say one thing? I know we're a little long on this question, but I think it's kind of important.
But it's an important one. So yeah, we can spend more time on it.
I see this narrative all the time on, particularly on Twitter, right? You'll see people say, this is an attest, not an audit, right? And I kind of already referenced this around the use of terminology, but that is kind of, it's a misunderstanding of the standards. So without going to a super long, boring explanation of audit terminology, when a company goes to a US CPA firm, a licensed CPA firm, and they ask for some assurance essentially over their product, their financials, something like that, the auditor really only has like 3 tools. They've got an examination opinion, which is the same thing financial statements are issued under. They've got an agreed upon procedures report, which is an attest report that the likes of which like Nexo uses in this case, or a review, which is a much lower standard. So it goes from sort of high level of assurance down in layman's terms. But the idea that an audit, for instance, is much different necessarily, or shouldn't give or gives users a higher level of confidence than the process that we're doing, I think it's just a misconception of the standards and the terminology. If what more could you ask for, frankly, than deep integration with the client systems, pulling data in real time and having a full picture of the assets and the liabilities, right? So that's just from our perspective. We're passionate about this stuff. We want to advance the space. And so that's the way we think of it. We're trying to think of what is the best possible solution to give the end user and the company, but to give them the best solutions for auditability, transparency, and trust in this whole ecosystem. So we're not trying to cut any corners. And that terminology stuff is just, frankly, misused. People don't fully understand the attest standards as they are today.
All right, let's move on to the next question. It is for Clayton. Is there any chance of incorporating extra data into the audit? For example, user count and active users, list quantities of assets per type, coin, token, etc. Asks JD.
Yeah, JD, we're going to continue to work with Nexo, and Nexo has been a great partner on driving transparency. That's our whole brand with Trust Explorer, is always pushing that forward and lowering trust, or you having to trust our clients and ultimately us as well. And something exciting we're exploring with them right now, and like Noah mentioned in one of the earlier questions, is this sort of difference between a traditional kind of Bitcoiner proof of reserves approach that came out from the Mt. Gox days and our real-time attest product, and looking at how we can explore with Nexo, how we can merge those in a way and create this Merkle tree of liabilities, which is a computer science thing that Bitcoin uses, and which allows you as a user to come into our site and verify that you're included within that ultimate liabilities number. And it lowers how much you have to trust us on that liability side. I mean, you can trust us. We're doing a lot of work around that, but I think this would be cool if we get there and allow you to really verify that you're included in that. And actually, there's a certain level of, if enough customers come do that, it creates like a lock on it and makes it really like strong assurance that the full set of liabilities was there. And I think it's a great thing that this industry is moving closer towards this. It kind of went, proof of reserves, we call it, went through a bear market from like 2015 until more recently. And we're proud to have sort of led the charge out of that. And I think we're seeing more adoption from lenders and exchanges and other types of products. And we're really excited about that. And so that's something I think we're going to continue to drive towards, in other metrics that Nexo is happy to present, where we're also a willing partner on all of that as well.
Yeah, I was early enough in Bitcoin to remember the Mt. Gox aftermath, and then every exchange said we're going to do proof of reserves at least monthly, and they didn't once, and they never touched the subject again. The vast majority of them, it's even like famous and very used exchanges where, you know, it still tells me from their 2014 audit that my assets are covered. I'm not gonna name them because a part of that, they're incredible guys, but it's just a funny story. All right, moving on to the next question. It's for me. Does the audit attest that Nexo isn't unsustainably borrowing money to pay interest, or are such potential liabilities, in other words, junk bonds, not included? Asks Stallion. Now, as to what exactly is and is not included, I'm going to let the Armanino guys speak. But what I can absolutely assure you is that fundamentally, the business model of Nexo is sound. You know, there is no mystery as to how we generate our revenue. And, you know, it's very simple. We borrow from our clients at a certain rate, and we pass on that money to clients at a higher rate, and we make you know, money on the spread on this. That's our margin, the spread. Now this spread is increasing for a variety of different reasons. You know, you see the retail product, you see, you know, the earned interest, but in reality, you know, the highest attainable rates are not the rates that are for the whole loan book. They're much lower because we work with institutional clients, partners, institutional liquidity providers from whom we can borrow much cheaper. The rates that, you know, the highest rates with Nexo, they come with certain conditions. You have to have the fixed term, you have to have the Nexo token thrown into the mix. So a lot of people are earning those interests, but it takes some you know, configuring for you to be eligible for the highest rates. Same goes for the borrowing side. You can bring it down as low as 5%, 5.9% a year, but it is some things that have to be into the mix. So there is no mystery as to where the money is coming from. If the people that follow longer Nexo, they will remember that we were actually the ones to come into the earn game on crypto assets much later than, say, some of our competitors did, because there is a certain US company now in some sorts of legal trouble, and I'm always going through the trouble of not naming competitors. I don't like that, especially when you're not going to say something nice about them. But they said, quite frankly, the earned interest we're paying to clients is money that we are burning through. We don't do marketing. This is going to be our marketing, giving people free money. And we say we're not going to play this game. We have a very different view on how businesses should be structured in a more conservative way, where the business case actually makes sense, and you are not reliant on VC funding every 3 months for you to meet your liabilities. That's why we needed to figure out how are we going to generate the funds to then distribute to our clients. And that's why we came in later into the game. I mean, we lost some market share before recapturing it again, but we think that ultimately with this bull run, not only in crypto but in equities and just about anything, this has been going on for 10 years, and we like to be prepared for every eventuality, which includes bear markets, which I know the younger generation does not even remember the 2008 financial crisis. But these things do happen, and we do want to have a business that will, be self-sufficient and sustainable even through the hard times. So that is the not so short answer of mine to this question. And if the Armanino guys, I don't know, or Clayton wants to jump in and say what Thailand asks is included, feel free to jump in.
Yeah, we're not attesting over any kind of what your borrowing activity or like what you guys are doing there, but we see the whole picture. And so if there is anything that was unsustainable, it's going to show up on our platform. And that's why Nexo, I think, is taking an awesome leap to do this, because I think that they know if they do that, then we would know about it, and thus you would as well. So I think that's what this awesome transparency step has provided all of us.
Right. All right, moving on to the next question. It is for Noah. So what makes Armanino a suitable company to audit crypto projects? What made you take that step as opposed to traditional financial audits?
Okay, well, you don't have to address me as sir, that's for sure. But I do appreciate the question. Yeah, so I think our track record in the space is long. That's one thing. So Armanino started financial statement audit and other attest work with crypto companies in 2014. So that pretty early in the space. At that time, sort of our mid-market big firm competitors weren't doing any work in the space. And even the big four firms, the largest firms in the world, were very hesitant to get in. So, we cut our teeth as a team doing the Coinbase financial statement audit 2014 to 2018, and incredibly interesting, exciting engagement, and got a lot of experience there. We've frankly served a lot of the household names, the big names in crypto for many years now. And we also have a dedicated practice around this. So this isn't just simply a small offshoot of our audit practice. For instance, this is a strategic focus for the firm and a dedicated group. And that means we have dedicated people that spend 100% of their time doing nothing but crypto and blockchain work. And it's all public stuff, not walled garden blockchain stuff, but digital assets, public blockchains, and crypto. And then we've also, in doing this work, we've had to develop tools. So that's another thing that puts us far ahead. Just the capability, right, to be able to get access to blockchain data, to do test ownership with digital asset signatures on multiple chains. Those sort of things, require tools, and they require the time and experience So yeah, I say that, I feel very lucky to be in this position. I've had the pleasure of working with a ton of great clients and leading minds in crypto, and we've definitely learned things from our clients, and it's been many years that we've been doing it now. So I think that makes us a suitable company to audit crypto projects. Thanks for the question.
I'll add that our team really is like so deep in crypto and really really awesome. I mean, we have people like deep into DeFi, NFTs, like really early on that, and trading and stuff, just that like throughout our whole team. And we understand this industry, and I don't think there's no one else that can match our knowledge and depth that we've really gone into crypto back from when we first got in this in 2014.
Yep, absolutely. All right, moving on to the next question. Oh, this is addressed to everyone. How can I be sure that my client data, portfolio, address, names, etc., has been and still is kept confidential during the audit process? Well, you guys talk about the audit process, and then I'm gonna do a general comment if that's okay.
Yeah, so Trust Explorer, on the Trust Explorer side, we don't ingest any Nexo client data at this time at all, and anything we see when we're doing the traditional financial side or just doing some of our tests on Trust Explorer, we're bound by our professional standards on data and confidentiality with customers that we're very understand how important that is. The closest we would get is if that the Merkle approach I mentioned a little bit earlier, but even that's a hashed user, just a user ID that's hashed with SHA-256, like Bitcoin is. And so it's secure, and we're not looking at addresses or anything, any KYC type information and storing that. And we never will store any type of personal information in our database. And we do a lot of SOC reports and IT work, and so we understand controls around our systems and the protection of data and how important that is, especially in the current world in 2021.
Absolutely. And with Nexo, this goes beyond just, the interaction with other third parties such as Armanino or banks or whoever. We always have deployed the need to know basis approach, where, if you don't absolutely have to have the information for you to get your job done and for you to help develop tools and services that are useful to the clients or execute an aspect of them, then you don't have access to the data. And we have been very strict about it. It's not like everyone at the company can pull all the customers' data and nothing like that. We have also internal checks and balances, algorithms and software, which, if one of the employees who has access to certain sensitive data starts acting out of the norm, for instance, he starts, filtering the largest accounts and looking up their house addresses, we would be immediately notified so that we can take preemptive action just to guarantee the security of that person, of his assets, and an overall good experience with Nexo. We are very mindful of that, have always been since 2018. And I think we have a solid track record on that front. So rest assured, your data is protected and safe with us. Moving on to the next question. At Antoni, now that the audit is here, will this change regulators' view of Nexo and more specifically the token security status and earn on crypto in the United States? Asks US Nexonian. Now, the audit is always great. Any sort of third-party